Tokenization, transforming the future monetary system. Introduction. In this article, we will explore the concept of tokenization and its potential to revolutionize the future monetary and financial system. Throughout history, innovative monetary arrangements have paved the way for economic growth and development. From paper ledgers to electronic record-keeping, each step has facilitated trade and commerce. Now, we stand on the brink of another major leap with tokenization, which goes beyond mere digital representations of money and assets. Tokenization introduces new capabilities that could transform the way we conduct economic transactions. Understanding tokenization. Tokenization involves integrating the records of an asset, typically found in traditional databases, with the rules and logic governing transfers. This creates two important capabilities. First, contingent performance of actions. Parties can undertake actions conditional on others being in place. For example, reciprocal transactions can occur simultaneously, streamlining processes and reducing intermediaries. Second, composability. Multiple actions can be bundled together into one executable package, allowing for complex transactions involving several parties. Current monetary system, separate databases, and intermediaries. Our current monetary system relies on separate databases maintained by banks and intermediaries. Account managers oversee records of ownership and transfers, while third-party messaging systems link the information. This setup leads to the separation of messaging, reconciliation, and settlement processes. Tokenization, streamlining operations. Tokenization combines messaging, reconciliation, and settlement into a seamless operation. This not only saves time and raises efficiency, but also facilitates better allocation of resources and risk sharing. By resolving information and incentive problems, organizations can explore new economic arrangements that were previously hindered by frictions. Tokenization in practice, supply chain financing. Tokenization holds great promise in tackling real-world challenges, such as supply chain financing. In traditional setups, suppliers often need upfront financing, but buyers may be reluctant to pay until goods are delivered. Tokenization allows smart contracts to respond to real-time information, such as GPS data, to release funds or modify terms as milestones are met. Challenges and solutions. While tokenization efforts are underway in the crypto and decentralized finance (DeFi) space, there are obstacles to overcome. Existing projects lack a tokenized version of central bank money as the settlement asset, limiting their integration with the broader financial system. By incorporating central bank money in tokenized form, we can establish a foundation of trust and seamlessly integrate all elements of the financial landscape. The role of tokenized private money. Two main candidates for serving as tokenized private money are asset-backed stablecoins and tokenized deposits. These forms of private money can complement central bank digital currencies, CBDCs, and act as the primary means of payment for real and financial transactions. Conclusion. Tokenization represents a significant leap forward in the evolution of the monetary system. By combining technology with financial instruments, it opens doors to new economic arrangements that were previously hindered by information and incentive problems. As developers continue to explore new use cases, the true potential of tokenization will become even more evident, shaping the future of the global financial landscape. Understanding human nature and identifying bad debts. A tax insight. Introduction. In the world of taxes, it's not just about numbers and calculations. It also involves dealing with people and their actions. Understanding human nature and its impact on tax matters can be crucial, especially when dealing with bad debts and tax credits. In this article, we will explore how human behavior can influence tax-related decisions and how it is essential to identify and address bad debts accurately. The complexity of human behavior. Human behavior can be complex and multifaceted, impacting various aspects of life, including tax-related matters. People's actions, intentions, and values play a significant role in how they approach tax filings and credits. Recognizing these behaviors can help us navigate through tax-related situations effectively. Recognizing bad debts and tax credits. Dealing with bad debts and tax credits requires vigilance and understanding. Identifying bad debts and accurately claiming tax credits can save businesses from unnecessary financial burdens. Here are some key points to consider. Bad debts. Bad debts can significantly impact a business's financial health. Identifying bad debts that are considered worthless and taking appropriate actions can mitigate the consequences. Tax credits. Tax credits serve as incentives for businesses to grow and innovate. Understanding how to claim tax credits appropriately can reduce tax liabilities and maximize financial benefits. Tax preparers and their intentions. When seeking assistance from tax preparers, it is essential to gauge their intentions and dedication to the task at hand. Not all tax preparers may have the best interests of their clients in mind. Some may be motivated by selfish desires rather than genuinely helping businesses optimize their tax returns. The consequences of actions. Actions have consequences, and this applies to tax matters as well. Those who act with integrity and honesty are more likely to succeed in the long run. On the other hand, individuals who engage in dishonest practices may face repercussions that affect not only their financial standing, but also their reputation. Silence and its significance. Silence can speak volumes about a person's character and intentions. When people remain silent or choose not to speak, it may indicate various things, such as introversion, reserve, or hidden motivations. Paying attention to silence can provide valuable insights into a person's personality and behavior. Changing for the better. While human nature may be inherently flawed, it is possible for individuals to change for the better. Recognizing the need for improvement and working towards positive transformation can lead to personal and professional growth. Conclusion. Understanding human behavior and its impact on tax matters is crucial for businesses and individuals alike. Dealing with bad debts, claiming tax credits accurately, and choosing trustworthy tax preparers are essential steps in optimizing tax returns and financial outcomes. By staying vigilant and mindful of human nature, we can navigate through tax-related challenges and make informed decisions. Remember, it is not just about numbers. It is also about the people behind those numbers. The truth about the income tax, unveiling the distortions and legalities. Introduction. In this comprehensive article, we delve into the truth about income tax and uncover the legalities surrounding it. Exploring the historical context and relevant court cases, we aim to shed light on the misconceptions and clarify the facts. Join us as we navigate through the intricate world of income taxation in the United States. Part 1. Federal Employees and Unilateral Changes. In the first section, we focus on federal employees and the impact of unilateral changes in their employment contracts. It becomes evident that only federal employees are subject to income tax by clear statutory language. We examine Section 86, which identifies the taxation of property agreed upon under employment contracts. We discover that the compensation agreed upon was unilaterally diminished by Congress without the consent of the federal employees. This unilateral change in the employment contract was deemed illegal by United States judges for the next 70 years. As a result, federal government employees became the first tax protesters in American history. The judges recognized that the withholding of a 3% compensation tax violated the Fifth Amendment of the Constitution, which protects property and liberty from being deprived without due process of law. Part 2. Judicial Understanding and Refusal. Continuing our exploration, we shift our focus to the judicial perspective on income tax. In 1863, Supreme Court Justice Tenney addressed the implementation of Section 86 on federal judges' compensation, declaring it unconstitutional. Justice Tenney highlighted that the law diminished the compensation of every judge by 3% and warned that if such a diminishment was allowed, it could be further reduced at the legislator's discretion. This insightful letter emphasized that the judges understood the true nature of this law as a forced debt obligation, not an actual tax. Subsequently, in 1869, the Attorney General's opinion solidified the notion that no income tax could be lawfully assessed upon the salaries of officers in office at the time the statute imposing the law was passed. This opinion, published in the Opinion of the Attorney General, Volume 13, page 161, has been consistently followed by the department supervising the collections of public revenue.